Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, I'm joined by Chris Leyland, and we'll bring you up to date on asset markets over the past 24 hours. Looking back over yesterday, and it continued to build on that theme that Chris was discussing, just of slightly less volatility across asset markets, a slightly better performance from equity markets, and that continued to build yesterday as we went through the day, particularly in the UK. Talking about the FTSE 100 was our best performing asset market in the month of January, and that trend has continued a little bit, reaching a 2-year high, albeit briefly yesterday before trading a little bit lower as the day progressed. Largely driven by the move in oil price and sort of the impact that we were seeing of that, both with BP and in Shell. But really on BP's case, it was the discussion about the windfall tax, or the potential, I think, for windfall taxes to be used as a tool of policy in the coming months, although it's very uncertain really if that's going to be the case. Maybe turning to the US, Chris, what were you taking from the US market yesterday?
Yeah, I thought it was actually quite notable that US markets, whilst initially lower, rose through the course of the day and actually closed at their highest levels, or close to their highest levels, I should say. And I think, as a team, Jeff, you'll know this yourself, but one of the things that we really concentrate on is the company earnings reports. And I guess there's various different themes that are coming out of those company earnings reports, and maybe some consistent trends that we've seen through this earnings season. So I think firstly, there's a robust demand backdrop, and that's continuing, so that's positive. I guess on the other side of things, we're still seeing disrupted supply chains as an issue, but you're starting to see that issue soften a little bit, certainly compared to what we were seeing last year. And as well as that, you're also seeing that some of the companies are concentrating on higher raw material costs as well. Yeah. But I guess the key thing is, and this is the thing that's really interesting for us, is really how do companies deal with that? So are they going to use higher prices? So are they going to pass on those higher raw material costs, maybe some of that supply chain disruption, onto the individual consumer? Are they actually going to absorb it themselves? So absorb it through margins overall. And then I guess the key thing is, how will then that factor into the earnings reports in the future overall? So for us, it's a really fascinating time. And it's really interesting. I think the really important things for us are really trying to see what forward guidance that's coming through.
And I think that's the important thing, that what we're trying to do here is to cut through quite a bit of the noise that's out there in terms of reporting. We see a lot of reporting that's focused more on the negative. Absolutely, as opposed what we would say is that actually when you dig into the data and you look at it, we're seeing companies reporting better results. And if we think about the data that we've got on the S&P 500 at the moment, we know that we've seen around 50 odd percent of companies report. They're all 70 odd percent are reporting better results, and they're reporting earnings that I think are about 8-9% above estimates. So really, when you cut through that noise, the backdrop is that companies themselves are doing okay.
Yeah, I think that's a really important point. The reality is that I think about the conversations that I've had with either financial advisors or end clients over the last week, and a lot of it's been really focusing around a couple of companies that have had maybe slight misses on their earnings, particularly Meta or Facebook, if you want to call it that. But the reality is that in general, the company earnings reports have been good. Yeah. So I think for us, really just echoing what Jeff said, it's so important to cut through the noise. If I could spend all day reading BBC News or something like that and think to myself, this is really bad, the world's going to end here, and it's not. In general, things are quite positive.
And I suppose the other area that we've been talking about on morning markets is what we've been seeing in sovereign bond markets. And I suppose their yields have continued to move higher, but maybe the rate of change has slowed a little bit.
Yeah, absolutely. And I think, if what's happened really sort of, I guess, since the start of January, is you've seen investors reappraise what's happening with interest rates overall. So the trajectory of interest rates globally. And what you've seen there is actually quite a fast rise in sovereign bond yields, But what you're seeing now is actually a little bit more of a slowdown overall in sovereign bond yields.
And I suppose that's the important thing. In the US, we've moved from around 151 at the beginning of the year, 197 yesterday. Similar moves in the UK, but also the Euro region really catching up in terms of that speed of move following sort of the comments from the ECB last week as well.
Yeah, absolutely. I mean, it's quite fascinating. I've been following the ECB stories we all have in the investment team, and I think when we listened to Lagarde's initial comments last week, there was a view really that she was starting to become a little bit more nervous around inflation, and that actually her thoughts were moving to potentially a more hawkish policy, so the potential for interest rate rises to come through at a faster rate than initially was expected. But then what you've seen since then is almost Lagarde start to crack that a little bit. And actually, when we think about the main developed markets overall, the ECB is arguably the most dovish right now compared to those other markets.
We saw that yesterday with Lagarde's comments, but also the governor of the Bank of France also pushing back on the market reaction. So quite interesting there to just observe how that plays through, and maybe it speaks to the challenge that the ECB has, particularly France. It doesn't have the same inflationary problems as others. 3.9% inflation yesterday, relatively low when we're thinking about US, UK and other European regions.
Yeah.
In terms of the day ahead, what can our viewers expect?
Yeah, so we've had a positive start from Asia overall, which is good. That's fed into Europe this morning, which again, very pleasing to see that. So the futures are pointing to a positive open in Europe. And also if we look at the US markets as well at this point, they're pointing to a positive open. So again, pleasingly, it looks to be a decent day.
And certainly a couple of things there in the background that are maybe supportive of that slight improvement in sentiment, just the ongoing dialogue with Russia around Ukraine. We saw that yesterday feeding into a lower oil price. Also just thinking about some of the policy, no change to Japanese policy overnight either. Yeah. So a number of factors there in the background that are certainly helping sentiment. But many thanks, Chris. And thank you for watching Morning Markets today, and we look forward to seeing you again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.